What's going on, people? 57 Julius here, back with another video. Today we got a Day Date 40, Platinum Day Date 40 with a blue Arabic dial. No, anyways, hope everyone's doing well. First video after a year. Sam, I hope you're watching this. Aeon, I think you're a bit more advanced, but still good video to watch. Alright, so, oh my god, it's been a year. Okay, so, let's get started. Today's video will be based on discipline, yeah, start up, which is basically me just giving you a rough understanding on how to start this shit up, and, what else, and like, how to trade based on the trend of the markets. This is a brand new account because you guys won't understand my main account. Harry, you should be watching this too. You're right next to me, mate. You should watch this too, yeah, if you don't understand this, yeah. But recap my videos, and I'm just gonna do this for you lot, yeah. Do you wanna say hi? Say hi to yourself. Say hi to yourself, dickhead. All right. Anyways, all right. Let's go. Yeah. What? Alright. Alright. Brand new account, yeah, so let's go. Alright, so apologies because it's brand new account, so all this shit does not matter. Alright, we got the S&P 500. Yo! How are we gonna trade NASDAQ? Oh, okay, no, we're gonna have to trade the free ones. Oh shit. Okay, yeah, no, because NASDAQ, you gotta pay for it. It's £8 a month, unfortunately. But, I think, no, it should be okay. Alright, so yeah, let's get started. No way this is NASDAQ. Wait, let me see. Yeah, it is NASDAQ. Kind of look a bit weird though. Okay, so, yes, let's get started. So, first of all, this is basically how to get started, or how to actually use TradingView. So, what is this? Exit the screen. Yeah, I hope you can see my screen. I don't know what this is. Alright, so, yeah. Basically, how you're gonna start this shit is, on your phone or on your laptop here. Literally, just download TradingView. Right here, you can see it says TradingView. You wanna download TradingView, and, yeah, that's all you technically need for now. What I would also recommend is you need to start trading off a demo account. So what I mean by that is you can use MetaTrader 5. So I'm not going to show you in this video, but to the people I know, I will obviously show you and guide you. But yeah, so let's get started. Wait, how do I full screen? All right, yeah, so let's get started, yeah. So first, yeah, once you download TradingView on your laptop, computer, phone, iPad, whatever, it doesn't really matter, yeah. This is how it's gonna look. It should look like this. Make sure you have the S&P 500 and NASDAQ on it, because those are the main pairs you're gonna be trading. And so first thing you wanna do is go into settings. So if you're on the computer, right click and go into settings. If you're on an iPhone, there should be a settings button around the bottom, so it should look like this button. First, you want to go to, wait, which one is it? I don't even know myself, mate. What the fuck? Alright, basically, you need to change to electronic trading. So all the candlesticks will be there. Fortunately, I actually can't even find it. Let me think. I don't really like any of that. But, where's electronic trading? What? Okay. Alright, anyways. It's a bit weird because I cannot find it. No. Where's electronic trading? That's really weird. It's not there. Alright, it doesn't matter, yeah. Forget what I just said. Okay, so this is how your trading view should be. Unfortunately, I can't use the replay button because to be able to use the replay button, you need at least no, I don't think you need essentials. So essential trading view, which costs like 20-30 quid a month, but I wouldn't recommend it yet. So this video is based on setup and starting up, as in starting on how to actually start trading. So I'm gonna basically first we're gonna start off with startups. So how to actually use TradingView. So on your right hand side, you've got your watch list where you have all your currency pairs. So right here says the S&P 500, and you have Nasdaq. Yeah, so this is what you really wanna. It is important obviously because it shows you what you're trading. Down here, and I'm only going to show you what's important. So all this other stuff you don't need to worry about it. This is your alerts. So for example, what you can use alerts for is how you'll use it is, for example, you obviously need to use it in the future anyways, but for example, say you want to trade, you're waiting to trade around this level, let's say 870 right here, let's say 870, you would create an alert at 870, kaboom. So anytime the markets come and reach into this level, you'll get a notification saying that the markets have crossed this level. Alright, now left hand side. This is the delete button. So for example, if you make a bunch of lines and whatever, you draw in it. If you draw in it, then obviously you're going to want to delete it. So you press remove 9 drawings and kaboom, everything's gone. Simple. Alright. So wait, one sec. Someone called me. Who the fuck called me? Yeah, I know who called me. Alright. Now, this button is just to hide the drawings. So instead of deleting it, you would just hide your drawings. It's the lock button, which you don't really need to use it, but this just locks all your stuff. So, for example, you press the lock button, you won't actually be able to, you won't be able to, oh, never mind. Alright, so, this doesn't really matter here. Delete button matters because that's to be able to delete all your drawings. And so yeah, this is the sidebar. What I would recommend you to add is you, for example, hover over this icon, press onto it. You want to add trend lines as your favorite, horizontal line, go down to the second one. You want to add Fibonacci retracement, go down to this part where it says projections. You want to add long position and short position, and go back down again. You want to add rectangles, and yeah, that's it. Literally, that's it. So these are the main tools you'll be using. At the bottom here, where it has a star, if the star is off, you won't be able to see your tools. If the star is on, then you'll be able to see your tools. And so yeah, from the top here, this search bar is just to search up currencies. For example, Euro USD, kaboom, Euro USD. Start on Nasdaq anyways. Plus bar doesn't really matter. This is your time frame bar. You definitely need this. This is important. So what I'd recommend you to add is 1 minute, 3 minute, 5 minute, 15, 1 hour, 4 hour a day. That's all you should focus on. I've had the weeks and the months, whatever, but you don't really need it. Right here shows you all the candlesticks. So hollow candlesticks. You have these candlesticks and whatever, but you just want to stick to regular candlesticks. Indicators, you're not going to be using indicators just yet, but I use indicators like the RSI, Relative Strength Index, the EMA, and yeah, whatever. But yeah, no, you guys don't want to be using that. So alerts, same thing. It's at the top instead of the right hand side. and this is just forward and backwards. But yeah, so that's how you use TradingView. It's pretty simple. Once you get to know, you will know. It's very, 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 very simple. All right. So this video is based on discipline, how to like work TradingView, obviously, and oh my god, I forgot this, and also like learning how to trade based off the trend, which if you watch my other videos, you should have a rough understanding. Okay, so discipline, yeah. How this trading thing will work, yeah. So if you guys are starting off trading, just know that it's not a quick money scheme. I'm going to be lecturing you guys, by the way, a long ass lecture. This is not a quick money scheme. It takes time. It took me almost 2 years and a half to actually make my first bit of money, first single penny. And yeah, this game is not easy. Only statistically, only 3% actually get a payout from trading, meaning 3% actually make money from trading, and only 1% of that 3% make money consistently, as in having it as a full-time job or a full-time thing. So this game is really not easy. It takes time, effort, discipline, takes blood, sweat, tears, everything. It is not easy. Yeah, so yeah, so I'll give you a bit of advice and what you should do to speed up your process and what you should avoid that I've did. So first of all, obviously it's not a quick money scheme. It takes a shit ton of time. It took me 2 years and a half once again. But yeah, so I think whoever's starting out, you want to take your time, put in some effort, put lots of effort in if you're taking this serious. It's not going to be that easy, obviously. This game is based on mainly a mental game, so it plays with your psychology, and not 90% of it is based on psychology. So let me explain how. How it works basically is the first 6 months to a year is your learning phase. You're going to learn how to trade, how to read the markets, how to identify how to trade, and how to be able to make money from the markets. And then after your first 6 months to a year, once you know how to actually trade, you don't want to learn no more. Like learning, a good example is for example, if someone played basketball and if two people were competing to see who was better at basketball and they've never played basketball before, and one person, he learns it as in theory, so he does it as in what's it called, coursework or whatever. So basically he watches videos on how to play basketball, watches NBA players, and the second person plays in a course. He actually puts in effort and practice. Obviously the person who puts in effort and practice is going to be better than the person who watched videos, because he actually put in efforts and practice. And so literally what I'd recommend you is your first 6 months to a year is your learning phase. So that's a time where you want to actually watch videos and put in the hours of watching videos. There's no way to speed that up. You just have to watch them and learn how to trade. And then after 6 months to a year, what I would recommend is do not learn videos, do not watch videos, do not strategy hop, yeah? If your strategy doesn't work, it doesn't mean the strategy doesn't work. It just means you're bad at the strategy, or you don't know how, or you're just trading, you're not trading the strategy right. So it has nothing to do with the strategy is wrong. It's based on you. Like this game is you versus you. So after your first 6 months to a year, you want to practice in the markets. You want lots of practice in the markets. You want to demo trade, like consistently demo trade, journal your trades down. You need to forward test your trades, so forward and back test. What back testing is basically this replay button once after 6 months to a year. I'd recommend you to buy or like pay monthly for the essentials pack. It costs like £20 a month. And or a free alternative is FX Replay. I've never tried it before actually, but I heard it's good. And so what this allows you to do is, for example, you can go back in time. So you'll press the replay button, you'll go back into time, and for example, say we go back into time because this is a free account. Let's say we go back into time here. you would basically be trading but back in the time. So you would do your setups, trade, whatever, and then basically practice trading. So this is the best way to practice and see how your strategy works and see if your strategy works for you, because not everyone's strategy works for everyone. Everyone has, like, in trading, everything is different. Like, everything is personalized for everyone. So you guys, if you guys learn what I teach you, your stuff won't be the exact same way as I trade. I'll trade differently. We all have different brains, so it's really, really different. But yeah, I would recommend to forward test, back test. Forward testing is during the live markets, whilst the markets are moving. You don't trade on a demo account or anything. All you do is you set up the trade. So for example, say I was setting up here and I was aiming to take profits around, where's this level? 550, and stop losses around 428. You wouldn't take this on a demo account, or I wouldn't even recommend you buying a prop firm on a live account. You'll just set it up and just let the markets just play out. So let the markets just go up or down and see what happens. That's just basically forward testing. And big recommendation is stare at the charts. Watch the markets. Around the starts, you need lots of practice. You need market experience, lots of market experience. Literally just watch the markets, see how the markets move. And yeah, that's one thing which will also speed up your process. Because watching the markets can obviously, you'll gain market experience, and you need lots of knowledge in these markets. So that's the first thing. Second thing is psychology. This game is a big psychology game, and what I mean by that is, I think I've accidentally recapped over this already, but wait 1 second. Quick sesh break. All right. What I mean by psychology is you can have the best strategy in the world, but if you have rubbish psychology, then you'll be rubbish in the markets. And what I mean by this is, for example, you have the best strategy in the world, yeah? Let's say you're going for shorts or longs or whatever, but if you have bad psychology, so if you have fear or FOMO, fear of missing out, if you have greed, so adding more lot sizes or adding more contracts, so that means adding more money towards the markets. What else? There's lots of things to do with psychology. Feeling fear and greed, which I've already said. There's a bunch of stuff. I don't know why my mind's a bit blank today. But yeah, there's so much stuff to do with psychology. So you kind of need to be calm and emotionless before you trade. And also one big thing is trading will change you as a person. It's definitely changed me as a person. And so what I would say, or how it did change me as a person, is based on my emotions and how I act around people. So I'm a lot less more emotional, depending on the situation. But in the markets, I'm 100% emotionless, because obviously you need to be emotionless in the markets. You can't be emotional. For example, if you're going longs, you can't be really greedy and just being like, oh, I know for a fact that the market's going to go longs or buys. And so yeah, and one thing also is, do not predict the market. Predicting the market isn't a cool thing or whatever. You need to react off the markets. The markets don't care if you predict it, that it's going to go up or down. You need to react off the markets. So if the markets are going to push up, you need to react off it by buying. It's going to push down, react off it by selling. Never predict the markets, only react off the markets, because the markets don't care about you. Next thing, risk management. Risk management is a big thing. Risk management and psychology basically sums up your whole trading. You can have the best strategy in the world, but if you have rubbish psychology and rubbish risk management, you're always going to be unprofitable. You'll stay unprofitable. For example, kaboom. This is your risk to reward tool right here. If you take a trade which is a 1-to-1 risk to reward ratio, so let me give you a good example. This is a 1-to-1 risk to reward ratio trade. So for example, you're risking, let me use the toolbox. You're risking $100, 100 bucks, yeah, to make 100 bucks, which is technically gambling. Not really, but that's what gamblers do. They risk $100 to make $100 back. That is unprofitable. Well, no. Obviously, there are traders that can do this, but to be able to consistently take 1-to-1 risk to reward ratio trades, you need a 100% win rate, or you're cooked. And what I mean by this is, for example, let's say you take 5 trades. Yeah. Let's say you take 5 trades. Good example is 2 winning and 3 losses. What does that give you? A 40% win rate. Yeah. 2 winnings and 3 losses. Because average win rate in this game is between 40 to 60. I have a 60 to 70% win rate. Yeah. But anyways, let's say you take 5 trades. 2 of them are winning, 3 of them are losses. If you take a 1-to-1 risk to reward ratio trade, yeah, you're going to be in a loss. What I mean by this is, for example, 2 are winning, so you make $200. 3 are losses, so you're losing $300. You're going to be down $100. So you don't want to trade 1-to-1 risk to reward ratio trades. Around the start, what I would recommend is start off with 1 to 2, because that means you're guaranteed to at least be in profits. And so in the future, once you become better at 1 to 2s, you'll move on to 1 to 3s, but never focus on a high risk to reward ratio trade. Start off slow, start off with 1 to 2s, then 1 to 3s, get better at 1 to 3s, and start with 1 to 4s. For example, this is a 1 to 2 right here. If you take 5 trades, so let's say you take 5 batty boy trades, yeah, 2 are wins and 3 are losses, yeah, kaboom. If 2 are wins, you're risking 100 to make $200. You're gonna make $400, $400, £400, I guess. Yeah. 3 losses, meaning you're risking $100. You're going to lose $300. Meaning that for the whole week, say you took 5 trades in a week, for that whole week you're still gonna be up $100. That's why you should always, around the start, what I'd recommend, obviously, well, what you should do, kind of not optional, or you'll be unprofitable, or the journey will take longer, is focus on 1 to 2 risk to reward ratio trades. Literally just 1 to 2, because it will guarantee you to be in profits. In profits, if your trades are obviously, if you take, for example, 5 trades, 2 are winning and 3 are losses. Better if you have more winning trades, but yeah, literally you need to take a minimum of a 1 to 2 around the start. Practice and get good at 1 to 2s, so identifying 1 to 2 risk to reward ratio trades, and then move on to 1 to 3. That's my best advice. What else with risk management? Risk management, yeah, that's basically a key thing with risk management. Around the start, you want to focus on risking 1%. And so let me quickly give you a brief understanding on how I risk. I used dynamic risk management. I don't really use TradingView. I use something called Bloomberg Terminal, which I pay 30 grand a year for. This Bloomberg Terminal is based on order flow, so it's quant trading. You guys will learn quant trading in the very, very future, so after a year's time, because quant trading is bankers level technically. Only bankers use it. But yeah, whatever. So, risk management. I use something called dynamic risk management, which is a lot different to how you guys are risking. For example, because you guys don't have the capital to actually trade on a live account and be able to lose the money, you guys have to start off with prop firms. So what prop firms are is it's stimulated trading. Good prop firm for futures is called Top Step. Quickly write it down. Top Step. Yeah. Top Step is a good futures prop firm. So how it works is, for example, you'll pay $50 a month, which comes to 40 something pounds. That's including tax and VAT. You'll pay this fee for a 50k account. So they'll give you 50k capital, which is stimulated. And so how it works is you'll trade off the account. So you have a maximum loss limit of $2,000 and you have a profit target of $3,000. You need to reach the profit target of $3,000 within a no time period, but just reach the £3,000 $3,000 profit target. Then there'll be an activation fee which costs $150, so that's to activate the account. And then kaboom, you'll have a 50k account, which doesn't mean you have 50k capital. All it works is it's just stimulated funds, because 97% of traders lose their funded accounts. So technically, these prop firms are just paying out losers money. So everyone who loses their accounts, they don't get their $50 back. So that's how it works. But you can make good money. So I know people that makes 1 to 200k per month just off prop firms. So that's really good profits. But yeah, so start off with prop firms, and your risk management for prop firms is going to be a lot different to how I risk and how dynamic risk is risk. So for example, the way I risk is, let's say I have a 50k account. I risk based on my risk tolerance and based on the day. For example, I don't risk per trade, I risk per day. So per day I'll have a, let's say I'll have a 10% I'll have a 10% loss limit. So that means in a day on a 50k account I'll lose 1k max, which is 10%. So I'm risking 10% on a day, meaning that per trade my risk per trade will be different. So one trade I might risk 1%, another trade I might risk 7%. So that just, the way it makes the difference is, for example, if I take 2 trades a day, that means I've probably risked 3% and 7%, or 5% and 5%, or 4% and 6%. It's different. But or if I take multiple trades, it'll be different. But the way you guys want to risk is, for example, your maximum loss limit. Yeah, so maximum loss limit is $2,000, yeah, and your profit target, your profit target, so profit target, this new keyboard's a bit weird. Your profit target is $3,000, so in percentage, yeah, $2,000 out of a 50k account, yeah, would be 4%, and your profit target is 6%. But you don't really have to think of it in a percentage way. So you're gonna start off with risking per day, or no, you don't want to do that. You want to focus on per trade. Per trade, you want to risk maximum $100. Yeah, you're aiming for 1 to 2. So 1 to 2 is max 100 risk. So you're risking $100 to make $200, which is obviously a 1 to 2. You're risking $100 to make $200, which is obviously good. So we're risking $100 to $200, and I would advise you to only take 3 trades a day. So the maximum you lose is $300 in a day. And for example, if you are good for the day, or if you were trading well for the day, and all trades were winners, you would have made $600 for the day, which is good. So that's what I'd recommend, which is best thing I'll do, because with forex trading it's a lot different. Your maximum loss limit is 10% and your profit target is 13%. So the way you would risk is a lot different to how you're trading in futures. So yeah, risk $100 to make $200. And yeah, that's how you would basically trade on a prop firm account. And yeah, I think that's it. Trend lines, let's do that. So next topic, which is trend, how to trade the trend. It's pretty simple. I hope you've watched my previous video because it'll make it easier. But yeah, how to trade based on a trend. So you want to use the high time frame, So the daily time frame right here shows the daily time frame. Of course, like if you're trading futures, as in the Nasdaq or the S&P 500, the overall market is going to be bullish. So you're going to mainly look on the 4-hour and 1-hour time frame. That kind of indicates the overall trend. So currently, the overall trend right now is bullish, because you see right here, markets are bullish. 4-hour, let's see. 4-hour, the markets do look bullish, but at the same time it's bearish. So let me explain. You guys will be learning how to intraday / scalp. So high time frame, as in 4-hour and daily, doesn't really necessarily matter, but time frames that do matter is 15-minute and 1 hour and lower, obviously. So obviously, if you watched my other videos, break of structure and chalk. So change of character. So let's forget that this exists. Right here, the markets were in a downtrend, creating a low high, lower low, low high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Markets here failed to create another lower high and then a lower low. So what I mean by this is markets created a lower high, which is right here, and failed to break these lows. Yeah, the markets broke these highs, meaning that at this level, the markets broke the previous highs. These are the previous highs, meaning this is considered as a chalk, change of character. Yeah, change of character. Change of character. Right here, this is a change of character, meaning that the markets have done a reversal. That's obviously how you catch reversals, but trend lines, as in you want to look on the 5 and 15-minute time frame. And so how you can clearly identify if the markets are bullish or bearish is, this is a good example. Markets creates a higher high, then a higher low. Then what happens? Markets break the previous high. The previous high is right here. Previous high, once it breaks out the previous high, it becomes a BOS. BOS stands for break of structure. Oops. Break of structure. Boom. This is break of structure because look, markets creates a higher high, high low, breaks the previous high, so it creates another higher high. Then creates a high low. Kaboom. What's this? Breaks the previous higher high right here. Kaboom. Breaks the previous higher high. Breaks the previous higher high. So yeah, this just basically indicates that the markets are bullish. But yes, the market's overall bullish, and then here it comes to around here when it becomes bearish. So like the markets create a higher high, higher low, a high low, higher high, higher low, higher high, higher low. This is the low here. This is the low, which I'll mark in white. And this is the previous high. So the markets failed to break this previous high 2 times, and then it breaks the previous low, which is right here. Boom. Now the markets are in a downtrend. Oops. Now the markets are in a downtrend. So look, once it's in a downtrend, creates a high low, lower high, lower high, lower high, lower low, lower high, lower low. Breaks these previous lower lows. So basically we're just waiting for the markets to break the previous lower low. So this is the previous lower low right here, and previous lower low right here, previous lower low right here, and then what happens again? This is the previous lower low. So obviously when the markets did come up to here around these levels, markets were supposed to break these previous lows, which did not happen. It broke the previous highs, which is right here, which is what caused a change of character. The markets to do a reversal. And yeah, I think that's it for this video. I'll potentially, well, I'm gonna try upload 2-3 times a week, and yeah, just help you guys. But yeah, just remember that this is not a quick money scheme, quick making money scheme. It's gonna take you a long ass time. It could take you a year and a half, even 2 years, even longer. I know some traders that it took them about 8 years. There's a trader I know that took him 8 years to be consistently profitable. That's not to scare you guys, by the way. It's not going to take you 8 years, but everyone's different, yeah? So put effort, put your time in this, and make sure to always write down notes. Skibbity, goodbye.